Hello traders, this is Blake Morrow and you are listening to the week ahead video for January 17th, 2021. I want to thank you guys and gals for tuning in today, and before I get started, let me mention this. Please like this video if you're watching on YouTube, subscribe to the channel, and also share us on social media. If you saw this via a link on Twitter or a link on LinkedIn or maybe on Facebook, please share this with your friends and followers. We would appreciate it, and definitely give us a thumbs up, because if you give us a thumbs up, it also pushes us up higher in the rankings in YouTube, and it'll get shown to more people. So there's a nice little effect that goes along with that. So thank you so much in advance for all of your support and listening in each and every week. Now, also, I have to mention that this is, we have our New Year's special, our offer. This is a special pricing offer that only happens a couple of times a year. And it's still live, and it's going to be live till the end of the month or close to the end of the month. But make sure you take advantage of it. I have a lot of traders that specifically wait and have waited up until last week when this went live to take advantage of this. Don't continue to wait, just go ahead and jump in. And then when you do that, download the mobile app. So this way you have all of our analysis, the chat room, and all the support and resistance levels, the updated analysis, all at your fingertips on your mobile device. All right, you can get those apps in the Google Play Store, the Apple Store. Okay. All right, let's get started. It was a really busy week last week, and it was really some really key developments happened at the end of the week. Let me move over Data Flash. By the way, Data Flash is included with ForexAnalytix. Oh, you know what? I also have to mention something else. Real last minute thing. You guys notice that we have a relationship with LiveSquawk. You can see their news feed. These are like Bloomberg and Reuters articles and headlines as they're hitting the news wires. So you guys get access to that with ForexAnalytix. The cool thing is if you want the audio squawk, we're going to be releasing that here in the next couple of weeks. And you're going to get a discount with your ForexAnalytix subscription. So if you go to LiveSquawk directly, you're going to pay a little bit more. But if you're already a ForexAnalytix subscriber, you're going to get a little bit of a discount. Details are going to be to follow, and I'm not going to cover them here. All right, so let's talk about last week. So again, last week on Friday, some really key developments happened in the markets, and we are starting to see the dollar gain a little bit of strength here. Now, one of the things that I really want to talk about that happened on Friday is where the S&P closed. And just so you're if you're using ForexAnalytix, just know that our analysis is updated throughout the course of the weekend. Our team is working on, the basic technical analysis, new harmonic analysis, Asian analysis. It's not updated right now, and I'm obviously filming a little bit early, so I don't want to go ahead and I can click on some of the analysis, but you'll see like this one on the S&P was actually updated on Friday, or on Thursday, and you can see we were talking about Thursday night about the key support that came in at 37.67. Well, if you want to talk about where the S&P closed, it actually closed below that. And the reason why that's critical is because I think this is going to be influencing the currency market. And I'm taking you over to, we could do it two different ways. We could actually go through ForexAnalytix and go to the live charts here. And you can actually access trading view charts right here through ForexAnalytix. And then you can draw on them if you like. I'm actually going to pull it over to our ForexAnalytix account because all my lines have been saved there for a long time. So I don't want to redraw everything. Last week we talked about this channel in the S&P, and the interesting thing is the S&P closed at its lows of the week. So if you look at the daily chart, we actually closed at the lows, but more importantly is we closed below the 38% retracement that came in right here at 37.67. That was pretty important because to me that signals that the S&P is probably heading back down towards the 37.50 level. Now, an interesting thing is on Friday, Goldman Sachs, their technical analyst over there, I forget what his name is. He noted the 21-day moving average. And he said, well, we haven't closed below the 21-day moving average since November, and that's this red line you can see here. I put it up specifically for today's analysis. I'll actually remove it, but notice how we've been closing. We dip below it, but we close above it. So the reason why this is important is going into the beginning of this next week. And we do have the late and great Martin Luther King holiday that is in observance on Monday. We'll be broadcasting since the currency market, obviously the currency market doesn't close, and as big of a deal as Dr. Martin Luther King is globally, his day is not celebrated in any other country for that matter. So U.S. equity markets are going to be in observance, but the currency market will still be open. So we'll see some currency activity, obviously, the first couple of days of the week, even though U.S. markets North American markets might be kind of quiet. Anyway, reason why I point that out is because the futures will be open. And what might happen is we might start seeing a sell-off below this, we are at the 50% retracement at 37.40, excuse me. That's the last low back on January 4th to the high. We're basically at the 50% retracement. I would think that we are going to see down here at 37.50, 37.60, which I think is going to be pretty key support. Now, the reason why I point that out is because that's the target. Well, if you've been listening here, go back to last week's week ahead video. We were looking at this channel, but Goldman's technician is actually looking at the 37.50 level as well, or 36.50 level as well. And I need to make note of that because I think that this area right here, from like Monday to Tuesday, Wednesday, you're probably going to see, this little trap door open up in the S&P where we might have a continued sell-off. Now, if the S&P continues lower, what would you expect as a currency trader to happen? Well, what I would expect is probably some dollar strength. And you guys know we have been watching the dollar index. The last week, the break of the downtrend line. Go back and listen to last week's week ahead video. Broke the downtrend line. Broke this little triangle consolidation. My guess is the dollar index is probably heading back towards 91.50, and where we go from there is going to be probably more dependent on the ECB, which the ECB rate decision is on Thursday. So that's something to consider. We have to take that into consideration because will the ECB try to talk down the euro since they have verbally mentioned the strength of the euro, or not? And if they choose not to talk down the euro at current levels near the 120 level, we could see the euro bounce from the key level of support, which I'm going to talk about here in just 1 second. Also this week, you're going to have the Bank of Canada. That's also a very important central bank meeting, which will be on Wednesday. And what we've done in the dollar Canadian is we've actually created a possible double bottom. Now, if you look, and let's take a closer look to the dollar Canadian. I've been trying to play the dollar Canadian on the long side. We had this descending wedge, played this breakout. It came down really quick, and I took some profits there. Not as much as I thought we were actually going to come out of this pretty aggressively. Well, we did aggressively, but I thought there would be some sort of continuation back towards 129.50. That didn't happen, and then we slumped back down to support. Actually held support at 126.30. You can see this right here, and to be honest, if we crack this 618 retracement right here at 28.30, then we have a double bottom in play, right? And then that double bottom could actually indeed take us back above 130, even if it's just briefly. But that's something to keep in mind because the Bank of Canada, if you recall, I believe in November, I want to go back to I want to go back to like the end of November, somewhere in this neighborhood when and I don't have the date for you specifically. I'm trying to think exactly when Macklin that was talking about the strength of the Canadian currency, that they had an eye on it. Anyway, and at this exact same time, the exact same week, the RBNZ had talked about them not really too concerned about the strength of the Kiwi dollar. And at that moment, especially if you're listening to the F.A.C.E webinar, I said that probably one of the better trades out there, just from a central bank bias, you know, the way that the rhetoric trade could be the New Zealand Canadian long. You'd be short Canadian dollars, long the New Zealand dollar, and I think that happened probably about right here around mid November or so. And I mean, we have been moving up. We've moved up nicely since then. Now, obviously, we're pulling back right now, but the Bank of Canada, if they continue to talk down the strength of the Canadian dollar and say it's not, but because of economic fundamentals, or maybe it's, they're just really concerned about the strength of the Canadian dollar, it doesn't deserve to be here, blah, 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 whatever they say, it could influence the dollar Canadian. Therefore, what we've got to be watching for is we've got to watch the 128.30 level. If that level breaks, it does trigger a double bottom. Okay. And that should take us back towards 130, if not above. Now, if you don't think that that's possible with dollar strength, let's take a look at the euro. And as we head into the ECB meeting on Thursday, the euro had a pretty negative close. And if you don't recall, at the beginning of the year and at the end of last year of 2020, and you heard me mention it multiple times at the end of last year, every piece of bank data I have read has talked about dollar weakness into 2021 and buy the euro. Basically, that's it. It doesn't matter if you were looking at CIBC or if you were reading Barclays or Citigroup or whoever. I'm just rattling off any bank, Goldman Sachs, whatever analysis you're reading. You're reading. Is CIBC even still in existence? God, I don't even read their analysis if they are. So I'm just throwing out names. Anyway, but every bank analysis that I read was basically sell dollars, buy euros, or sell the dollar. The euro is going to 126. It's going to 130. The ranges were different. But bottom line is they were all very bearish the dollar. So now here we are in the second week of 2021, and the dollar is at the highest levels of 2021. So we're seeing a little bit of a retracement of the euro trade. So what I think is a little combination of poor positioning in the euro, and that's being unwound. Now, I think if you, whoops, I didn't want to grab that. Let me put that back. My bad. Okay. If you do a simple A equals CD, that takes us to 120, right? Now, also, if you're looking at from a Fibonacci, not that one, let me get rid of that for a second. If you're looking from a Fibonacci standpoint, right? You see this here? Okay. The 50% retracement comes in at 1972. Now, the big breakout point was at 120, right? You can see this red line right here. Big breakout point at 120. The AB equals CD takes us to 120. I think there's a risk, just from a positioning standpoint, that stops below 120 are going to be taken. And if they are, I think that it's going to provide us an opportunity for those of us that want to trade back in the direction of the overall trend that we have here in the euro, for us to play on the long side in the euro down here, 119.50 to 120. For me, depending on what's happening and depending on what day it is, the reason why I say what day it is it on Thursday during the ECB meeting, or is it a couple of days before? Is it a couple of days after? Depends on what the ECB says. But realistically, I am going to be looking for the 120 to 119.50 as a place for the dollar to pull back or the euro dollar to bounce, because I think the 120 breakout area is big enough where it's going to attract a lot of buyers. Now, looking ahead, 2, 3, 4, 5 months from now, is the 120 level the ultimate level to buy the euro before we head back to 130? Or will we go to 122 and then back down to 118 and then back over to, I don't know. I wish I had the crystal ball to tell you that, but I think that 120 should provide at least a tradable bounce level going into the next week. Again, let me remind you, if what I'm saying to you right now makes a lot of sense and you think it's going to be helpful for your next week of trading, please give me a thumbs up on YouTube. I'd appreciate it. Share us on all the social media platforms. Mucho gracias. Okay, so I've talked about the dollar index. I've talked about the euro and the ECB and the Bank of Canada. Now, there are obviously a lot of different currencies that we could pay attention to. Notably, we have the Aussie that had this false breakout of we call it a throwover in the channel last week. A lot of you guys see me on Twitter talking about the throwover. Looks like we might break the lower end or lower bottom end of the range of the channel. It's quite possible. The Kiwi dollar head and shoulder pattern. You got the US dollar, Norwegian krona coming out of a descending channel as well. There's a lot of different things happening in the currency market. And if you really want to know what I'm thinking from a day in, day out perspective, even if you're not a ForexAnalytix subscriber, make sure you sign up for our free daily webinars, which you'll get my opinions first thing in the morning in North American trade. You register right here for the F.A.C.E webinar. Also, the link is in the description of this video on YouTube. If you're watching us on YouTube, just click on that link and then you can register and listen in to me every day. Because, the beauty of being a trader is that I have the flexibility of changing my mind instantaneously. So the opinions that I'm giving you right now on how I feel the market is going to move may change with one piece of data or one headline from a central bank at any given time. So that's why it's imperative to listen in every day, especially if you're actively trading the markets. Listen in to the webinars every day. This way you get an updated view on how I feel, because the way I feel today could be completely different than next week. A lot of things can happen in a week, especially with the inauguration happening this next week of Joe Biden. Donald Trump is outgoing and we have Joe Biden incoming. There are risks to next week for social unrest in the United States, and how the FX market and how the equities market respond to all this. I'd love to tell you that I've lived through an inauguration where we have civil unrest. I haven't. Not since I started trading in 1996. Even in 1994, when I started in the business, it really, we're just, this is a lot of this, especially the last several years has been very uncharted for the currency market and for, many of us that have been in the markets for over 20 years. So it's imperative to stay on top of the news flow this next week. There are other things that are happening this next week. We do have European economic data at the end of the week. We have PMI data that's being released. We have Canadian retail sales. We have Australian employment on Wednesday, or actually Thursday morning in Australia. So there's going to be a lot of things happening throughout the course of this week. And then you throw on top an inauguration of a new president in the United States. So things could get busy. So guys and gals, I've bent your ear long enough. I want to thank you so much for all your support. I want to thank you for those of you that are ForexAnalytix subscribers and you hang out with us every single day. And if you want to try to get ForexAnalytix for free for a period of time, click on the Forex sponsored link. And if you're outside of the US or Canada, open an account with Pepperstone Securities. You can get up to 4 months of freeness of ForexAnalytix, depending on how much you trade. All right, guys and gals, my name is Blake Morrow. I hope you guys have a great remainder of your weekend. Thank you. Bye-bye.